Welcome everyone to From the Ground Up. You've joined the show here. I'm John Boitnott. This is a Grit Daily sponsored podcast where we talk to entrepreneurs about the companies that they are running and how they're running them. And the hope is that other entrepreneurs out there who are watching can learn a thing or two about how to run their companies better. And today I'm joined by CJ Konstantinos. We were calling you CJK. You're with People's Reserve. Do you like going by CJK or just CJ or what?
CJ is more natural to me. I think just on X, I've developed this CJK type reference, but CJ is more natural for me.
Great to have you on the show, CJ. People's Reserve. Tell us about yourself and what People's Reserve is.
Yeah, so my experience with Bitcoin and the internet economy started 12 years ago. I had bumped into Bitcoin, and much like everybody who starts in Bitcoin, it's a chance to trade and make money. There's lots of volatility. Started buying Bitcoin at $150, went up over $1,000, came all the way back down, forced myself to ask, what is this? What's going on? And that's really when I started my deep dive. That deep dive led to me getting into Bitcoin mining. I later created the Bitcoin fair value algorithm, which is an algorithm used by miners to track their cost of production and make sure that they're running their operations as efficiently as possible. From there, I created a Christian investment analysis community, a community of people who are interested in Bitcoin and decentralized technology and exploring the intersections of this future of finance combined with traditional finance. And it led to eventually People's Reserve. And the main reason being, I bought my first single family home let's see, like 7 years ago for 100 Bitcoin. And I can tell you that my single family starter home is not worth anywhere near $10 million. So watching the value of my home appreciate in dollars and watching my neighbors get excited and celebrating, but then at the same time watching my home crash in the value of Bitcoin, they're all happy. And I'm like, I'm getting crushed. I'm getting destroyed.
How did you pay for the house with Bitcoin? Are you able to walk me through how you did that just for people?
Yeah, absolutely. I mean, at that point in time, the only thing you could do was sell the Bitcoin for dollars and then use the dollars to purchase the property. And that was the problem. So that experience kind of enlightened me to say, hey, Bitcoiners are going to have a problem. When you're using Bitcoin, which is an engineered money, meaning it was strategically designed through its protocols to accrue value and appreciate in value over time. When you spend that asset, because that's really what it is, it's a digital asset. And when you spend it, you give up ownership. So, much like Elon Musk borrowing against some of his Tesla shares to turn that equity value into purchasing power to help pay for his purchase of Twitter, which he now calls X, Bitcoin is like evolving from this digital gold where you can only sell it for dollars and buy what you want, to now becoming this pristine collateral that you can actually use with different financial tools like you would a Tesla stock to borrow against it and turn that equity into real world purchasing power, increasing your quality of life and standard of living today instead of, tens of years into the future. And that's what People's Reserve does. We are building the financial tools that exist around real estate, automobiles, equities, cash equivalents. Now, we're seeing this happen with the strategic Bitcoin reserve. We're seeing the monetization of Bitcoin. We see countries now accumulating Bitcoin. We see Bitcoin treasury companies raising hundreds of millions, even billions of dollars from US capital markets to accumulate Bitcoin. That signals the monetization of the asset class. But now that the asset's being monetized, the next step is the evolution from digital gold to pristine collateral, which is the financialization of the asset class. So those financial tools that help you access the equity value of your Bitcoin rather than just having it as a HODL asset that's trapped on your balance sheet, we unlock that value and allow you to spend it into the economy, spend it into your business ventures or whatever you deem necessary.
So I'm a customer, I have Bitcoin, and I come to you and you're going to help me unlock it to go purchase a home. Shed a little light on what that process looks like, just for the everyday person who's going to be a customer.
Absolutely. So we have a suite of Bitcoin powered mortgage products, which include a self-repaying mortgage, a Bitcoin powered mortgage, a home equity Bitcoin line of credit. I mean, obviously there are a lot of financial tools built out around real estate. So any type of contract that you can imagine besides a construction loan contract, we've been able to fuse Bitcoin into this contract. So when you come to us and you say, hey, I have this beautiful $500,000 home that I want to purchase, and, I'm self-employed. And I don't really use credit that much. I'm having a hard time getting financing. I've gotten a few offers, but I'm up in the 7-8% range. It's not really affordable, even though I'm looking at a house that should be affordable for where I am in my life. And I'm having problems accessing financing. Well, we have decided to create a contract that allows you to cross-collateralize both real estate and Bitcoin. And what that does is Bitcoin eliminates a lot of the requirements that are needed for like debt to income ratios, the ability to pay back the loan. So a lot of these safety regulations that are great regulations and make a lot of sense that were put in place after 2008, Bitcoin checks this off, because when you come to us and you want to borrow $500,000, you need to post $500,000 of Bitcoin to initiate the loan. So if you were to just borrow the money and then walk away from the loan, the lender has the ability to liquidate your Bitcoin if you default on the loan. So it creates a positive relationship between both the lender and the borrower, which I think is a really healthy thing. I'm sure for the watchers of this show who are business astute, they understand that there's an issue in credit markets right now, right? And we need to find a way to lower risk within credit markets. And Bitcoin as this pristine form of collateral is the perfect solution. When integrating it into these traditional products, you get the best of both worlds in a lot of ways, including no credit checks, no proof of employment, just being able to post an equal amount of Bitcoin that you need to secure the financing to purchase your dream home without giving up ownership of the Bitcoin like I had to.
You keep calling Bitcoin pristine collateral. It's new to me. Would tell us what that means and why, how it's important to people's reserve and your products and services.
Yeah, and that's a really great question, because a lot of people don't understand the difference between money and currency. But a lot of your listeners, I'm sure, are aware that in 71, they removed gold from backing the dollar. And when they removed gold from backing the dollar, one of the main reasons of this was that credit extension was taking place and people were turning in those dollars to get the gold. There wasn't enough gold because you can infinitely create credit, but gold had a hard supply. It was hard to increase the supply. It takes time and energy and proof of work to pull it from the ground. Well, what happened was gold, when it was backing the dollar, not only were there problems of credit coming against the claim of the asset gold, however, if you were to borrow against your gold or use it as collateral in an international transaction, sometimes it would cost more to settle the transaction because you'd have to transport the gold, secure the gold, and move it across the country. And it would take a very long time for that to happen. So naturally, what ended up happening are these cash equivalents or U.S. treasuries or municipality debt. These became a better, stronger form of collateral for settlement because they were all tracked on a centralized ledger between banking partners. So instead of having to secure and transport gold, it was much easier to just switch the balance sheet from one place to another in the form of a paper derivative debt note. But with the debt note, we lost the hardness of gold. Gold was hard to expand. You couldn't just infinitely expand that collateral. That made it a good collateral. Yeah. These debt notes, these treasuries, they can expand ad infinitum. And that created a new problem that the value of the collateral, especially over the long term, can actually lose its value. So with gold and treasuries playing that collateral role in our system since 71, the reason we call Bitcoin pristine collateral is because you actually get the best of both worlds. You get an upgrade from the hardness of gold to absolute digital scarcity. There are only 21 million Bitcoin and there will never be more. The supply cannot be diluted. It's the hardest money on earth. From the treasury side, you get an upgrade from this T plus 2 days, T plus 3 days settlement to 10-minute block transaction time. So you could settle Bitcoin anywhere in the world for 10 minutes with transaction finality, meaning that you have a completely secure, guaranteed transaction once settlement takes place. So Bitcoin is pristine collateral because you get the best of gold and the best of treasuries in this new hybrid asset that I think is going to transform markets as we move into the future.
Yeah. I know that there are problems in retail today with Bitcoin lending. What do you think is the biggest one that you see out there, and how is People's Reserve looking to or able to solve that problem?
Yeah, I mean, and the biggest problem to me has to be the liquidation risk. Even if you're, Elon Musk borrowing against his Tesla shares, if the value of Tesla went too low, then he would get a margin call, and he would be forced to sell those shares to close the loan. So the biggest risk in retail today, especially with the volatility of Bitcoin price, is that the price goes down too far and the value of your debt is greater than the value of your collateral, in which case they're going to liquidate your collateral to close the loan. And then you end up in a worse spot because you don't own the Bitcoin. And the goal is to own the Bitcoin for as long as you possibly can. So what People's Reserve does is we've taken specific liquidation mitigation tactics applied to our contracts. And with our Bitcoin powered mortgage, when you post your Bitcoin as collateral, the only way you get liquidated is if you default on the mortgage, is if you fail to make payment. You cannot get liquidated based on the volatility of Bitcoin price. So what we've done is we've created a new, innovative, revolutionary concept that we've plugged into our contracts that eliminates volatility-based liquidation risk with Bitcoin. And how we've done that is, of course, when the value of the collateral goes down, the risk for the lender goes up. Well, interest rates are not just based on the supply of money and the demand for loans. They're also based on risk. That's why they give you a credit score. You get a higher credit score, you get a lower rate. Lower credit score, higher rate, because risk is also a variable in pricing debt. So when the value of the collateral goes down, our risk goes up. Therefore, we have to adjust your interest rate upwards. Vice versa. If the value of Bitcoin goes up over time, as it was engineered to do, we can and it becomes a less risky loan for us, we can also lower your interest rate. So we've integrated adjustable interest rates into this product to eliminate that liquidation risk so that you can sleep well at night and not worry about this price volatility.
Got it. Yeah. What makes People's Reserve Bitcoin centric? What separates you from other competition in Bitcoin backed lending? That's one of the questions I want to ask.
I think that's probably the most exciting answer that we have, because the number one thing is interest rates. In the rest of the marketplace, you're going to borrow against your Bitcoin from 10 to 15%, which makes no sense. How can you walk into a bank and say, hey, I need to borrow $1 million and here's my job and lending history, and I promise I'm going to continue to work, and I promise I'm going to make payment, and then go into a different lender and say, hey, I want to borrow $1 million. Here's $1.5 million, or here's $2 million of Bitcoin to make sure that this loan is secured. Well, the $1 million to $2 million of collateral that's posted and held in escrow is a much less risky proposition for the lender than the guy who comes in and makes a promise. So it's backwards. Interest rates need to be lower than they are in the traditional marketplace, because Bitcoin is that pristine collateral. It is that risk reducer that makes the credit more affordable for the borrower, since they're posting the collateral. And what we do at People's Reserve is that we are lenders ourselves, but we've also sourced other LPs who understand that lending to Bitcoiners is actually a great way to diversify your lending portfolio. If all you do is buy treasuries and lend to the government, well, bad news. The government is already self-defaulting on their cash equivalents. They continue to run the printers in order to pay back the principal plus interest. So what happens is, over the life of the loan, as your principal is held in the cash equivalent, that cash equivalent is actually diluted. So if something goes wrong and you settle back into the cash equivalent, you've been through dilution. But with our lending module, what happens is the loan is not secured by the cash equivalent. It's secured by both real estate and Bitcoin, two assets that a lot of people like to accumulate. So our LPs know if something goes wrong, number one, the principal balance that we lent out is actually being stored in real estate, which we know goes up in value over time due to inflation, and in Bitcoin, which was engineered to go up in time with a big inflation boost, versus the cash equivalent that gets diluted. So if you have a lending portfolio and you want to diversify some of that dilution risk, lending to Bitcoiners is a great idea. And we've been able to source those lenders and bring them in and offer interest rates that make sense. Lower risk loans means that you're going to get access to lower interest rates. And People's Reserve will be offering the lowest interest rates in the world, because we believe that Bitcoin-powered finance is going to reshape and redefine who the risk-free borrower is in the credit marketplace, and what the risk-free rate of return truly is. No longer having the power of printer will define your level of risk. Instead, it'll be in a commodity credit market where the collateral, the value of the collateral, will matter more than the promise.
Okay. And so the growth of this over the next several years, do you see this being available in other countries, all over the U.S.? Take me a year or two from now, or 5 years from now. What are your thoughts on what it'll look like?
Yeah, and I love that question because I'm always thinking about what comes next. What comes next? What do we have planned in here from the future? And for us here at People's Reserve, we're going to be doing a really cool event here on coming up on July 4th, where we start here in the United States offering these products, and we do want to expand to other areas like the EU and Australia. But it's definitely going to take some time. So if you've reached out to us and you're an international borrower, just know that we are working on it in the background, and we do have plans to service you one day. But at first, our focus is going to be here in the United States.
Yeah. If I, just to think about this for a minute, let's say I'm interested in a $500,000 home. And I'm interested in financing it through one of your products using, with Bitcoin in there. How much? I mean, what would make me a good lender? How much Bitcoin do I need to have? What's sort of my profile of a type of person that you're looking for to be a good person to lend?
Yeah. So the perfect borrower would be somebody who could match the value of the loan with the Bitcoin that they have. So if you want to take out a $500,000 loan, you must post a minimum of $500,000 worth of Bitcoin. What that does is it proves that you can pay back the loan, which eliminates the need for debt to income and other things that add cost to the loan and add risk to the loan.
What about down payments and all that? Should that be in Bitcoin too, or what are your thoughts?
That is actually a great question. You can initiate our self-repaying mortgage or our Bitcoin-powered mortgage with zero out-of-pocket cost. So if you post $500,000 of Bitcoin collateral, you do not have to put any money down whatsoever. You can literally complete the purchase by just posting the collateral. There is no down payment necessary, zero out-of-pocket costs. And, the reason that we're able to do this, and something that is actually really more exciting, going back to what I was telling you about the volatility of interest rates, remember, it is an adjustable rate. So if you have been a responsible saver of Bitcoin, or you've saved up enough Bitcoin to initiate the loan over the coming years, as Bitcoin grows in value, or if you have the ability to post additional collateral, we actually let you shave interest rate points. You can buy points from the loan. So you could end up having like a prime interest rate, which today is around 7.5%, upwards of negative 50% to that rate. So you will get access. The cost of capital for the responsible savers of Bitcoiners will be the lowest cost of capital in the world. We're seeing that right now at Michael Saylor and MicroStrategy. He's issuing debt at almost 0%. So the cost of capital for Bitcoiners will continue to trend towards zero, and that will lead to the redefining of the yield curve. And I think we'll see, and that's another exciting thing for People's Reserve. We believe our products and services as a first market mover advantage, our loans are actually going to formulate for the first time in human history a true decentralized internet economy based free market yield curve. Because as you well know, in the regular traditional markets, central banks state the interest rates all over the world, and they create anchor rates. And those anchor rates are used to help control the yield curve. And if you're in Japan's situation, you might even have to print money to do yield curve control. But in the free market internet economy, there is no group of people to dictate what the anchor rate is going to be or state what a rate is going to be. It is a true free market interest rate based on the supply of money, the demand for loans, and the perceived counterparty risk.
Well, so, let's say I have some Bitcoin, but I don't have as much as what the house is worth. But I still like to, what does my sort of mix of different assets, what should it look like if I'm going to still use one of your products, but it won't all be Bitcoin? Or talk to me about that, what that could look like.
Yeah. So there are no other digital currencies that we accept as collateral. Bitcoin is money, and nothing else can compete with it as money. And because of Bitcoin's design, its engineered structure, it actually is a pristine collateral, and nothing else in the marketplace can compete with it. So you won't be able to post anything else as collateral besides Bitcoin. However, what you will be able to do is continue to deliver value to the economy, continue to work hard, spend less, save more. And that's the magic of Bitcoin. In the traditional economy right now, with inflation so high, if you're saving in dollars, or if you're saving and lending your money to the government in U.S. treasuries, or even in corporate debt or municipal debt, the APY, the yield you're getting on that savings vehicle, is actually lower than the true inflation rate. So you're actually losing in real terms. But with Bitcoin as a savings technology, Bitcoin has a 10-year compounding annual growth rate of 82%. that is an absolutely insane number. Nothing else comes close to it. And when you finally learn that it's not just doing that randomly, but it's doing that because it was engineered to do it, it was strategically designed to do it, then you realize, wait a second, it does make sense to save. When I was trying to save dollars, it didn't make sense. I've been better off spending them or investing them. But now that we have a savings technology, you know what? All that value I deliver to the economy, when I get paid for that, when I'm remunerated for that, I'm going to spend a little bit less and I'm going to save a little bit more. Why? Because that if the compounding annual growth rate of Bitcoin drops from 82 to 60%, in 5 years, you will 10x your savings. So even if you only had $50,000 in savings right now, without contributing to it at all, and Bitcoin underperforming, within 5 years, you'd be able to affirm your home. So my answer would be, if you don't have enough, continue to work hard, continue to be a responsible saver, let Bitcoin do what it was engineered to do, and sooner or later, you'll be a customer with us.
Sounds good. Okay, so we're talking about mortgages being one of the products that you guys offer. Any other products or services we can expect this summer, or review with me what's coming this summer, and also into the months following.
Yes, nobody ever asked me that question. Everybody's just always like, so like, wow, that's great. Like, I can't wait to learn more and use it. They forget to ask about everything else we do because we've shared a lot about our Bitcoin powered financial products, especially the Bitcoin powered mortgage and the Bitcoin bond. But People's Reserve platform is going to be a one-stop shop for the most important assets in your life, which are life or health, Bitcoin, and real estate. So when you come to People's Reserve, you're going to be able to manage in one spot all of the most important assets that you're managing, which reduces friction, makes things more simple, allows you to increase the quality of your life and standard of living, because we've built a platform that doesn't just offer financial products, but helps you stay organized, helps you understand where you are in life, and helps you understand how to take advantage of your balance sheet, how to leverage your balance sheet. Like we see all the wealthy in the world, they all have a super asset, right? Elon Musk has Tesla. Jeff Bezos has Amazon. They all have a way to unlock equity and turn it into purchasing power without creating a tax obligation. Well, what about we the people? What about the normal guy? What do we have? Bitcoin is our super asset, and the People's Reserve platform is going to help you manage that asset through all of the life cycle. And I couldn't be more excited to produce all of these solutions to what long-term Bitcoiners know are the problems we're facing in the marketplace right now.
Let's get people ready with how to get a hold of you and how to learn more about People's Reserve. What's the best way they can get at you and the company?
Absolutely. So I definitely recommend going to peoplesreserve.com and signing up for our newsletter. Our newsletter, you're going to learn about everything that goes into our launch. You're going to learn about our products. But in the long term, it's also about education, because at People's Reserve, we believe it's not just good enough for people to save Bitcoin. They really need to be educated on what they have, because then what they understand, what Bitcoin is and what they have, then we can teach you how to use it. And that's really when you can start to get ahead in life. So you'll learn that in our newsletter. You can follow me on X at CJ Konstantinos, and of course, follow People's Reserve on X at People's Reserve.
All right, CJ Konstantinos of People's Reserve. Great to have you on From the Ground Up.
Thank you so much.